because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And so the idea that we can get one bill to actually regulate the entire crypto ecosphere is not realistic, and that's not going to happen. At the end of the day, if it never makes any money, it's going to zero like every other business, and many will go to zero, and that too is okay. Crypto is not yet a real asset class because it hasn't been regulated yet. So for all the excitement about it, and one of the reasons I'm long, certainly 105 stock and 32 different crypto projects, is that I believe over the next 2 to 3 years we will get regulation, and then finally we can get institutional participation. People forget that 70% of the world's wealth is tied up in pension and sovereign wealth funds. And so if they're not allowed to buy the asset class, there's no underlying bid. And that's one of the reasons we can't get crypto past $24,000. It's really hard because there's not really a large constituency that's permitted to buy it yet, particularly Bitcoin and Ethereum and even USDC, probably the three most popular right now. And so if we do get regulation first, it'll probably happen in stable coins because that's been very volatile lately, and there is policy on the table in the Hill, bipartisan policy that's being contemplated as early as next September, which is not far away, just weeks. But over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. When, a Luna gets wiped out, an algorithmic stablecoin, it's a good thing. Now, yes, you have to sacrifice the company and you have to sacrifice some shareholders, but it's for the greater good of this nascent industry. And so everybody learns the hard way when you deal with idiot management. And idiot management, it's like a Darwinian force. The market scrapes them out of the system. They have a very hard time coming back and nobody will capitalize them. And that's great. And I think we're going through we're probably in the third inning of that. And the remaining companies are far better off. There's much more to acquire. There's assets out there that are very inexpensive. There's a consolidation going on. And the majority of survivors are much better at managing their situation. So, agnostic to the next thing that blows up, and I'm sure there'll be more, my attitude is, who cares? This is great news. And so the idea that we can get one bill to actually regulate the entire crypto ecosphere is not realistic, and that's not going to happen. Bitcoin is not a coin, it's software. Ethereum software, Solana software, Polygon software. These are software projects that will eventually prove out their merit, or they won't, based on the economics of revenue at some point. There's a lot of people that are dissuaded from doing this in the Ethereum mining business, so they're not that excited about it. So you've got, an inconsistent harmony occurring. And now anything could happen, but really at the end of the day, the ETH it's slow and it's expensive. And so if it doesn't fix itself, it's going to have lots and lots of competition. And so everybody has an opinion on this. And I think the market is being the market. I have a pretty big position as well. I'm going to wait and see what happens, because it has attracted more applications, more usage than anything else to date. But that doesn't mean it's fixed in stone. Anything could happen. And so I also think that there's other applications, from HBAR to Solana, Polygon, all kinds of different ideas in terms of how this should happen, and how financial services work, and the cost, the speed, the fees, the transparency, auditability, security, all of these things. When people tell you, well, I know with certainty this particular level 2 is going to really work, they have no idea. It's the adoption by users of apps and applications on top of it, and payment systems and transparency and all the rest I mentioned, that will eventually determine whether that platform is profitable or it isn't. At the end of the day, if it never makes any money, it's going to zero like every other business, and many will go to zero, and that too is okay. When you look at most markets, what you find is it's the adoption of standardization that creates value. So if all of a sudden there's 10 stable coins that come to market for payment systems, my prediction would be that there'll only be 3 survivors 10 years later. And they'll be behemoths, they'll be very large, and they may have slightly different attributes. But, you know, there's already 64 billion in Tether and 54 billion in USDC. They're likely to survive, assuming they can survive audit, and then maybe a few others. And always the rumor of the feds themselves creating their own digital dollar. I'm very skeptical of that. The last place you want development work done is with the government. They're the worst at it. And I personally believe over the next decade, crypto will be the 12th sector of the S&P. And the reason I believe that is when I teach graduating cohorts of engineers, I don't care what college you do it at. You can go to MIT, Harvard, you can go to Waterloo in Canada, or Temple, you know, Notre Dame, you name it. A third of the graduating class, the smartest hands above keyboards in the world, because some of these classes are 1/3 international, particularly MIT. They have no interest in, as engineers, to go back to the other 11 sectors of the economy. Zero interest in working there. They all want to work on the blockchain. So my argument is you can't take that much intellectual capital, the best and the brightest, put them onto this sector by the tens of thousands every week and not expect incredible outcomes. So it's just like at the beginning of the internet, and all of a sudden when people thought, oh, the internet's not going to be anything, look at it today, it's the backbone of the economy. The same thing I think will happen in crypto just by the amount of intellectual talent. So it seems pretty stupid to me to invite international students from geographies that are very advanced in crypto and then kick them out of the country after they're educated. It's very stupid, and that policy should be fixed. So we have to get some policy into this sector, or we'll continue to lose the country's brain trust in this nascent sector. Most of the people that own Bitcoin are high net worth individuals, family offices, hedge funds, and minor institutional clients, very minor. And so that's the opportunity, though. That's the upside. The whole idea is that if you think it's eventually going to get regulated, all of those other players will come in, and then all of a sudden there's going to be, 1 to 3% allocation in the typical portfolio, which is no different than a fixed income or bond portfolio or equity portfolio. And that's when this industry will begin to mature. And then also companies will build the financial infrastructure to actually be compliant in crypto with the reporting, whether it be capital gains and losses or some kind of, lending program where there's an income to it, or staking. All of that has to get worked out, but just zero compliance platforms. And so it's really hard to do that right now. And so that's why, for all the enthusiasm about Bitcoin, virtually nobody owns it. When you go to these crypto conferences, even the Bitcoin conference, there's two universes. There's 10% of the people, 1 out of 10, are hardcore Kryptonians, if you want to call them that, and they're great. They were the founders of this industry, and they're still very adamant about how it should be, and their opinions matter. But 99%, the other $1 trillion, $5 trillion, $20 trillion worth of interest, are institutions looking from the outside in. And when you go to these conferences today, the majority of people are not investors yet. And so you realize what the great potential is, but also the roadblock of policy keeping us out of it. And I would say now the US is falling behind. I think Canada's more advanced, United Arab Emirates, Switzerland, Australia, New Zealand, England, far more, mindful of the technology here and the use of it in financial services and the potential of it. So I think if we don't get some policy next year after midterms, we're going to start to lag.